All right, boys. This is the strategy that I'm using in 2026 to day trade Nasdaq futures and the S&P 500 futures. Do I have any drawings on here? I do. So let's back test. All right. So the first two things you need to know about the strategy, and these are the three things that you have to do the strategy. This strategy is based on draws on liquidity. All right. So there's three things that you need to do to have this strategy fully locked in. All right. First thing that you need is some sort of market experience, preferably 3 to 4 months, because that's where you start to understand like where the market's gonna move, where like if this fair value gap's ideal, or if you could wait for a longer time frame, fair value gap, what liquidity sweeps the best, like should I look for session highs, session lows, like all those sort of things just comes with experience, which even with the strategy I wouldn't understand until like I had 3 to 4 months of watching how the market moves on a daily basis. The second thing that you need to know is obviously you have to have the strategy down to like the complete base of everything. Every concept that I talk about, you need to know. You need to know when it works, what's an ideal reaction, when it fails to work, which is very important. Stop. Okay, I'll get into all that later. This is probably gonna be like a long video, like 20 minutes, 30 minutes video. Last thing you need is some self-control and patience, because the strategy doesn't work every single day. And if it does work, you'll get 1 to 2 good trades a day off of it. All right. Now, what do I mean when I say draws on liquidity? Now, let's take all these like irrelevant ideals of liquidity out of here, right? This bullish value gap we'll get rid of this, and we'll get rid of this. And do I have replay mode on this shit? On this account? I might low-key do. Okay. I do have this shit. I did not know I had that. Alright, alright. So this is what market looks like when market's about to open. So we'll get rid of this. And we'll get rid of... There's this 1 hour low, this 4 hour bullish, right? You got this 15-minute low and this Asia low. And if we go into the 15-minute time frame, right? Idealistically, when we're at this point in market, what are our draws on liquidity? Which highs or slash lows stand out to us? Mostly, this high right here is a very high target in my eyes. This London high is a decent target in my eyes. We could push past and go to the 15-minute high if we get enough bullish momentum. Now, let's say we end up going towards the downside, right? That's fine, because I believe once we sweep out this 1 hour low and fill in this fair value gap, we'll get a reaction and we'll end up taking out our draws on liquidity. How draws on liquidity works is price is going to take out these specific areas or these price points, and you just have to wait for some sort of confluence to get you there. So you're not really mirroring your bias. I'm not necessarily bullish on the day. I'm bullish until we take out this London high and get a reaction, or we take out this 15-minute high and get a reaction. It could even be like an hourly high, something like that. This is not an hourly high. This is a 15-minute high. So I'm bullish until we take out this, and then I turn bearish once we get a sweep of this liquidity up here, right? I don't know how to use bar replay, so I don't really know, like, what am I supposed to do? Am I supposed to, like, oh, you can play it. Okay. Wait, no. All right. Oh, fuck. What the fuck? No. Go back to market open. So market opens, right? And I want to see sort of a sweep of good liquidity, whether it be this 1 hour low or whether it be maybe this low right here. Some liquidity that gets swept out will give us a reaction. That's the first thing that I want to see. And that's the entire premises. So, right, that's market open. That's the next candle. The next candle's a drop. We end up sweeping this low right here. And we're not really getting... Bro, this shit moving like fucking fast as hell. Boom. Right? So what do? We end up sweeping out the liquidity that's at these lows, right? We end up getting one candle downwards, one candle reaction out of it. If we go to ES, I don't know if bar replay. Okay, bar replay works at the same time. At the same time, we're also sweeping out. Fuck, I didn't prep this. All right. All right, there's this session high right here, this London high. These are all my draws on liquidity. I don't know what this is. Maybe like a fair value gap. We have this Asia low, all of that. So we get this liquidity sweep on NQ. Now, what am I waiting for? I'm waiting for an inversion with a break of structure, right? So our break of structure point is right there, right? And our invalidation point is right here. This fair value gap. Don't pay attention to this bullish fair value gap. That's what I want to see. A close above here so that I could really enter. Right? Alright, so let's keep playing. We didn't get the close. We didn't get the close here. That's where we got the close. So honestly, I don't even know if I would have caught this, because if I entered up here, we'd already taken the London high out. So maybe if I'm feeling risky, I enter right here and then maybe try to run this, but I don't think that I'm brave enough to do something like that. And honestly, I don't think like you could have really gotten a sniper entry on there. You could see ES took out a session high, and I don't know if we have like an SMT. SMTs are a good part of it. But let's just say for the sake of this video that I did not catch this bullish trade right here, which is okay, right? Because as I say, market is a game of liquidity, right? So boom, we take out this 15-minute high, which is what I've wanted to see this entire day. I missed the bullish uptrend, right? I missed the bullish uptrend, but we took out this 15-minute high, and I'm starting to see a reaction, right? So now what am I looking at, right? And ES, I check at the same time. We made an SMT. From this 15-minute high at 10:15, we're getting we're the lagging index. And also, I don't know if I'm like really good at explaining this, so y'all tell me in like the comments if I'm not good at explaining stuff like this, and if I need to work on it or like illustrate the concepts, because honestly I don't know like how good of a job that I'm doing. And we have ESB, the leading index, right? So boom, ES is our leading index. So what I want to see now, and this is where the SMT really comes into play. This is how I utilize the SMT to like really snipe entries. So now we just get rid of all. I don't even know what is this like a 1 hour bullish rally gap? This is a 1 hour bullish rally gap. I think that we invalidated this, honestly. Yeah, we invalidated the fuck out of this. So I'm not even looking at this. What I'm looking at on the 5-minute time frame, do I have anything? Which we end up having. Well, all right. So we end up having this 5-minute bullish rally gap that I do want to see getting taken out if I am to take shorts. Right? On the 1-minute time frame, we end up scaling higher and sweeping out this high on ES, and on NQ we also make a contradicting SMT, which makes NQ the lagging index, and I mean the leading index, and ES the lagging index. But since this SMT is more high time frame, I'm still going with this SMT, right? So boom, now I'm really just waiting for ES to invalidate something. We have this 1 minute fair value gap here, right? And if we do get this inversion, at 9:05. So at 9:05, now what I'm waiting for, maybe some further confluence, I can wait for NQ to invalidate this fair value gap. Also, we got this breaker structure. Let's say I wait for NQ to invalidate this 1 minute bullish fair value gap, right? Which that's good enough for me. In my experience, this is really good enough. So I put my stops above this high, right? Where do I see the liquidity? Boom, right here at this 1 minute low. That might be the trade for the day. So let's see where maybe I move it here, maybe I don't. I would probably kept stops above there. So, and we'll just see how it goes. So we end up banging our TP. Maybe if I want to be a little like risky, I could play to this 1 hour low. But regardless, we end up sniping the position based on our entries. So okay, I'll break it down with an SMT. Okay, and honestly, I think this is good enough of a live example that y'all sort of understand it. But with an SMT, right? What I'm looking for is on the okay, Nasdaq. Okay, no. I think it'd be easier to break it down into leading. On the leading index, what I want to see is an inversion of a fair value gap, either a high time frame or a low time frame. On the lagging, I want to see a sweep of liquidity, a break of structure, and if a low time frame inversion on leading, I want to see another low time frame inversion on lagging, just for further confluence. Another rule of this is 1 to 2 trades a day, right? If you take a loss, it's fine. But as you can see, like this, if I really stuck around on the markets, this was a sniper trade, right? 335 tick win. Like, I really sniped this entry. Just based, and the reason why I snipe entries like this all the time is because NQ is lagging comparing to ES based off the SMT. So if ES already does something, I can sort of count on NQ to like, you know, to follow in its footsteps. As long as ES hasn't taken out like high time frame liquidity. Now, you can see at this point where we have this Asia low, if ES comes down and takes this out, which I'm sure it does, right? It takes it out. I pause it. Yeah, it takes it out at 9:16. Now I don't know if NQ's already, yeah, NQ hasn't taken the Asia low, so there's a chance that right here I would probably, if I was in a position, I would exit it, just based off the fact that we could see a reaction here, but I'm pretty sure we end up pushing down further and further. But as you could see, like we're starting to make a reaction, and then I guess the traction on NQ pushes us down. Another thing that I would be careful for, this 4-hour bullish value gap, I would not trade through it, because 4-hour bullish value gap, like despite the momentum that you have, like that's high time frame. Like you could really get a reaction out of it and just invalidate your trade or give you break even. So I wouldn't trade through things like that. But I don't know what this break is. But yeah, from here it's kind of invalid, or it doesn't really matter because look at the price action. It's just kind of bullshit. And I think I can get off bar replay, honestly. But that's really the strategy. I don't know if I did like an amazing job at explaining it. I'm gonna leave this on screen for a couple seconds just so like y'all could copy it down. But I don't know if I did like an amazing job. Another thing that I do like to add is I only like trade the Nasdaq. I don't really like trading ES. I just use it as further confluence, and that's really it. I appreciate y'all. Y'all boys have a good one.